Next question, and this one's from Na. I know you've talked about regional Victoria quite a bit, but just wondering, as soon to be an investor in regional Victoria, could you speak to A, how the key regional areas that Ripehouse have been purchasing in compared to one another, whether the performance of these regional areas depend on how the Melbourne market does to some extent, and C, the potential growth for these areas over the next 12 to 18 months from your personal perspective. So I might start in reverse order, but at the same time too, I also might look into some notes that I prepared earlier for you here, Nah, as well. So just don't mind me. But I think what we'd firstly, if we start from the bottom, what potential growth for these areas do you expect in the next 12 to 18 months? So I think what you're going to find, there's going to be certain pockets of Melbourne that are going to perform pretty strongly over that next 12 to 18 months because they have really tight supply issues from stock on market, from rentals on market, and as a result of that, their rental prices are going to really certainly their rental prices are going to push, and their house prices are going to push, and there's also going to be this flood of investors piling in because as it sits right now, there's not a whole lot of affordability in locations where they could buy before. So Perth right now, you're talking about a seven in front of most properties if you're trying to buy in Perth. Even in Brisbane, same rule applies. And even in some of those regional locations where you're able to get, high fives, even sometimes into the sixes or touching sevens, they're starting to wash away pretty quickly. And if you're starting to get in Melbourne, you can buy in areas, kind of hour and a half, 2.5 hours away from Melbourne CBD with rental yields starting at about 4.5%, some of them going up to 5.5%. So I feel we never really give, or I don't like to give predictions in terms of capital growth numbers. I think you're just going to find certain segments where buying under market value in some of those locations are going to be really, really strong compared to other cities. But I guess what we look for at Ripehouse is if we follow the R scores history is over the last kind of 6 years or so, properties we've purchased since 2018 have achieved over a 10% average, more than 10%, closer to 11, it's 10.89, nearly 11% compounding annual growth rate over that period of time. So for me, I would like to see that we're in that double digit territory. Now that, again, I'm not really sure because I'm personally on the fence a little bit in terms of what's going to happen with these interest rate cuts. It might start to see rent prices slow down across the country because I don't think landlords are as greedy as people think. But I'd still like to think that in those affordable locations that we're going to see some double digit level increases, particularly in those kind of sub $600,000 price points. When I go into question B, whether the performance of these regional areas relies on how the Melbourne market performs to some extent. So not really. I mean, historically, and we see this whether it be Melbourne, whether it be Sydney, whether it be Queensland, whether it be cryptos or stocks, liquidity ends up kind of flowing from market to market. They don't always necessarily go in line together. So you might see areas like your regional sections go through a really strong boom period for, say, 2, 3, 4 years. And then once investors have made their money or no longer see that perception of value in those regional markets there, that they start to move away from them. So they then start to go into their metro market. So I don't think they're heavily tied to each other, but you can get to a point, Perth's a good example of it, where people can come in and feel the entire market is undervalued. So it can all be tied together. So they're not really reliant on one another. One thing I will say about Metro Melbourne than regional at the moment, there is a bit of a pullback on some of the migration numbers for metro locations, particularly in Melbourne and Sydney, because again, the governments there are trying to be a little bit more proactive on the housing shortage side of thing. So, and that's not really applicable to the regional markets as well. So those visas won't be getting cut back as heavily in those regional markets. So I would like to think probably the regional markets are more likely to perform, but also too, because investors are running out of servicing, right? So there are still some fringe suburbs in Melbourne where maybe you can get in for the sevens. Yields are pretty poor. Um, you're going to start to see, I think, more investors will be more inclined to be still buying in the four, fives, and sixes, and that's likely to be in your regional markets as well. And I guess going to question A, so question A for you is probably better explained in terms of where we're purchasing at the moment. So I'll just drag something over for you now, and I'll just make sure I zoom in for everybody. Um, so at the moment, like in comparison to where we're buying, like, in South Regional of Perth, like if again we talk about affordability, 670 yields are kind of 4.8%. There's low stock. There's been very little transactions that we've actually done um, as a business in that period of time. And if we're in regional Queensland, next to, see one of the team's notes here, there's next to no value or there's no real listings of under $400,000 properties in regional Queensland. And I can know, seeing the names of some people on the call here, they're going to be some clients of ours who have actually purchased under $400,000 in regional Queensland over the journey as well. So it's good to know, I guess, from their perspective, they're not there, but for buyers, they're gone, well and truly gone. Victoria regional looks really strong. New South Wales regional is also getting, but again, it's not a whole heap of stock. And Tassie regional, some really good opportunities as well. I would actually say this goes up to around about the 650 price point. So I hope that answers your question a little bit there, Nah.